Very good afternoon, everybody. Our today's topic will be around how to develop consistency across different market phases. Now, this is one thing I really specifically feel that is the most important thing in trading, which most people don't realize. Okay. And before I go into this, I'd like to also focus a little bit on the options open interest, which yesterday got left out due to time constraint, right? So today we're going to focus on that, and then we're going to head on to our topic of the day. Before that, there are certain questions and comments which has come. So what I said in the very first session, Mr. Sai Prasad says that don't be a dog or donkey. This is what he learned. That's very true. And if anybody else wants to share realization, I'm really happy to see some personal messages, some YouTube comments, that it's really opening up a lot of mental gateways for people, right? And the entire agenda for teaching is that you solve the purpose, the inside purpose of the job is to really show the light and show the way, the specificities which a lot of people miss out, right? Okay, I'll talk about some chart specifics also. Some chart specific questions are there. Zerodha is not accepting order, accepting BO and COs. Okay, so since this is, I really don't want to talk about Zerodha in either manner. It's done a lot of service for people. Yes, it has hanged today in the morning, which is the truth. But how can I do anything about it, right? So that is the thing. What is the accuracy percentage if we trade only on the basis of option chain? Okay, very good question. Now, since we're getting into option chain, we'll take this in option chain. So let's say, for example, what have we seen the market do today? This is the 15-minute chart of Nifty. Just imagine there's so much to learn just by one chart, by one day by day, how the movement happens, etc. We saw that there was a gap down, a small pullback, a decent downtrend, and another pullback, right? If I take the decent downtrend to be intraday, there was from the pullback high, 11,019, okay, there was almost a 90 to 100 point, almost movement, right? Now what I'm trying to say exactly to you is that while all this is happening, I was talking and somebody commented also how to check in different time frames. So what did I tell? How does the time frame essence come about in technical analysis? Time frame essence comes because people in different time frames react to the markets, right, in a similar fashion. So when a lot of people are doing a lot of things at the same time, the market tends to behave in a certain way. It is because of real buying and real selling that the real price pressures, that the price movement happens, regardless of news or no news. Sometimes news acts as a catalyst, but it is the excitement and the pessimism which actually controls. So all this, when it comes to the futures open interest, okay, you cannot see which party is buying or which party is selling. You can see there's an increase in open interest and all that kind of narrative. That narrative that there's an increase in open interest, possibly there's a fresh build up and all these things which you hear in general may or may not be giving you the correct picture, because it does not really tell you that, see boss, these are the number of people who have gone long and these are all the retail people, or these are all the informed people, or these are all the stronger hands. You don't get to see that. What happens instead, in case of the option chain, there is an underlying assumption. What is that underlying assumption? The underlying assumption under option chain is that people who are retail traders more often than not are the buyers of options. Are you all with me on this? Retail traders are mostly buyers of options, not sellers of options, because of the high margin requirement. Yes or no? There is a requirement of professionalism also while you're doing strategies and selling options and all. It can be dangerous. So most retail traders are buyers of options. If you agree with me, then please raise your hands. Most retail traders are the buyers of options, right? Right? Right. Now, if you see my screen, on the particular screen I'm showing, I'm putting back the hands down for the time being. I'm showing you what exactly the phenomena is. As the movement in price happens, okay, as the movement in price happens, the tendency for the market to react in a certain way. Suppose there's a downtrend. Now, why does technical analysis be what it is? Because in case of a downtrend, most of the retail crowd tends to think what? Okay, bhaiya, we have always understood that if the price of something goes down, its demand should increase. Now, unfortunately, that is not the case in market. If the price of something goes down, its supply increases, its demand decreases, because nobody wants to buy that. People want to sell that, either exit their existing position or get into short positions, right? In case of a downtrend, most of the retail crowd is doing what? They're buying into the downtrend in the expectation and hope of a turnaround, trying to find a bottom and that kind of thing, right? Now, obviously, it doesn't work out, and the trend continues in the downtrend. And as much as strong the downtrend is, the more retail traders would want to buy. That is signifying to me that yes, boss, there is a strong downtrend. Now, in case of a strong downtrend, this phenomena is taking place that as the downtrend is happening, many people want to go long. And in the case of option chain, what we can see is that there is an open interest of the calls greater than the open interest of the put. It tells us one very simple thing. Tells us one very simple thing. What is that? That as the market was going down, people are buying the options. People are buying the calls more than the buying the puts. Therefore, if there's a greater open interest increase in the calls compared to the puts, it means that the higher favoritism is there towards the long side of who? The retail trader or the informed trader? The retail trader. So this particular variable, which is the option open interest, is actually a contrarian variable. That means it chooses to tell us what not to do. If people are doing this, I'm not supposed to do this. Other technical tools, for example, suppose I'm talking about a pattern breakout. Now that pattern breakout is trying to tell me that the strong masses, there is a lot of buying pressure, the bulls are overwhelming the bears are overwhelming the bulls, and therefore I should participate with them. But in this case, I'm not supposed to be participating with them. In this case, I'm supposed to be participating against them. Like I explained to you a few days back, that when there is a breakout, the nature of the breakout is that, when the seller standing over here, all the buyers are overwhelming the sellers. They're overpowering the sellers, right? So there is a lot of strength. There's a lot of strength and you should participate with the trend and with the strength, and this lasts for a certain time. Over here again, sellers are strong in this region, okay? Now this particular phase of market, such easy interaction points you're getting, every phase you don't get. For different phases of the market, we will require different aspects. We'll come to that soon. But as far as the options chain is concerned, there are two ways to look at it. One is to see how the ongoing market is behaving. So if the ongoing market is in a downtrend and there is comparatively a very high number of calls and people are not buying puts, they're exiting puts also. So you see a negative change in open interest. So you see, I'll just change the color of the pen. Yeah. You see, this is the change in open interest. This is the standing open interest. This is included in this. It's a cumulative figure, right? So change in open interest is showing me that today many put holders were exiting, whereas many people were buying calls in bigger magnitude. And how do I judge how much exposure people want to take, how much the bias is of the general masses and public by looking at the delta. So if I have a position with a very low delta, okay, I'm going to take the September 5th options so that we get, a clearer picture. Today is an expiry day. So in expiry day, there's a lot of theta decay. Yesterday we discussed about theta, that there's a nose diving impact on premiums. So anyway, both the sides are very much high in participation. But if we look at the 5th September, we see that the balance is towards showing me that the market is favoring the bears right now. Why? Because the retail people are expecting the market to go up. Why? Because here you see that there is a higher degree of open interest and positive open interest compared to the puts. Now, the on the money, let's take out the on the money. The on the money will have a delta almost equal, right? So you see on the money puts over here 25,725. This is the change in open interest, which is a positive change. And just a little bit in the money, 11,000, I see negative open interest. Here I see 1,44,000. Now let's compare to, and the outside, the immediate out of the money options, I see plus 1,75,000. But here I see a 10,57,000. I see a 14,11,000. So you see, it's like multiple times in case of what? In the money or out of the money? Out of the money. In case of in the money, we see people who are buying calls are lesser also. Okay, here puts are also being favored. So there's sort of a balance. But immediate out of the money, obviously people want to buy more calls. So this is something which is bearish. Now we are looking at it at 130. So something has already happened during the day. The fall to a certain extent has happened during the day. So as the trend was preceding, so when you see very strong breakouts, we say very strong trends, you can literally see that with the trend, this change in open interest scenario is happening, or if there's a continuation, if there's not a reversal in trend, you can see that the bulls are favoring or the retailers are favoring the bullish side or the bearish direction. Okay, you can literally see it as the trend unfolds. So if you want to see it as the trend unfolds, then see the change in open interest, number one. Number two, we look at the standing open interest and try to judge what the potential support and resistance zones. Okay. So for example, when I'm looking at 10,950, okay, when I'm looking at 10,900, there I see that compared to the calls, the puts have a high standing open interest in these. Also because these become in the money. So in the money have lesser liquidity, in the sense lesser participation, lesser volumes, right? And I see that on the upper side, when it comes to 11,000, etc., there not only is a standing open interest, the standing open interest plus a change in open interest. So 11,000 starts acting like a huge resistance for me. Okay. Why? Because we can literally see when people are expecting this to go beyond 11,000. The contract of 11,000 option to become in the money. Are you all with me on this? If yes, kindly raise your hands. Right? Thank you. Now, is this a very drastic change? Is this something which is very important, very big? Well, as far as the time of the month we are talking, right now seeing open interest, especially in the current month options, is not a very good idea. Okay? Because in the beginning of the month, then so we are talking about the very beginning of the month. Like if I look at the weekly options, still okay. A lot of weekly option traders are participating on today's option expiry rather than the 5th September. And when it comes to September end options, okay, very few traders are actually comparatively participating. Why? Because the time premium is very high and the level of participation goes down in options due to that. So when this scenario happens, the reliability of options becomes lesser. OI reading becomes lesser. So somebody who is asking, can I consistently make money with accuracy if I follow this? The first answer to your question is you cannot really follow this in every time of the month. Okay, especially the time we're discussing right now, this doesn't need to be followed. So we see this 11,000 zone, the market does not sustain. Okay, it takes some time and it starts going down. Okay, and not getting too much into the technical factors of each of the candle, but it starts going down. If I have to take the technical factors, one of the reason was this gap zone acted as a resistance zone, and there are the Elliott wave issue, Elliott wave factors, etc. So we've got a lot of evidences to see that the market is not sustaining and expect some further fall. Now what happens is, even on the daily chart, in fact, there is bearishness which is uh, sort of, it is creeping on. 1 second. It's not hanging because too many things are on my computer. Never mind. So if we look at the 11,000 area, in the morning, if you looked at it, the picture would have been somewhat different, but it would have been similar on the lines that there is more weightage the retail traders want to give on the charts which are on the bullish direction. Therefore, the market is likely to go down. So therefore, you can have a bias about the undertone of the market looking at the option direction, option open interest direction. So the second part of your answer is, his question exactly was, can I accurately trade consistently only on the basis of option open interest? The answer is no. The reasons are, number one, that options open interest are not exhaustive in every time of the month. Different times of the month, they become a strong variable to look at. And you also need to know how to read it. So because I have an idea about reading it, I've been reading it since years, even before people used to talk about it. When I was in my first year of college, I was reading it. Then a few years later, 5-6 years later, I realized everybody's talking about it. And I thought I was the one who discovered something like this. But honestly, so I've been reading for a long time, so it gives me a fair idea. And you have to practice how to read it. Okay. The second is your entries, exits, and your essence of understanding price mechanism also must include other variables and technical tools. See, every tool is a technical tool. It is not a system. Like candlesticks is a tool. It is not a system. Elliott wave theory is a tool. It is not a system. It is when you mix up number of tools together, that is when you get a system, right? So when I explain my students from the very first session, I say don't try to be too predictive. But after the third or fourth session, where they have more knowledge about multiple technical tools, then they automatically start showing the good predictions. Okay. So this is how it happens. And you need to be careful about what are the loopholes, what are the best times of every tool and what are the worst times of every tool. We need to be careful about that. If I identify a candlestick pattern very well, but there's a positioning which is best suited to that candlestick pattern, then you can go and get a 10 out of 10 candlestick. But if you get a positioning which is badly suited to the candlestick pattern, negatively suited, then probably that is not a very good pattern to take. Or in case of patterns, there could be false breakouts, right? So you need to be careful about these things. I hope I've answered your question correctly. I hope everybody is taking notes of what I'm trying to say with this. Any question, any counter question you can ask. And also you have to mix it up with the technical tools. So I said, so look at the zone over here. Okay, we saw some minor pullback over here. A minor pullback in the volatile market we see right now is about from 923 to 987. It's a 60-point pullback. Now this 60-point pullback which we just saw, okay, this is 923. So according to option open interest chain, excuse me, options open interest chain, 9, somewhere around here, we get a fair idea that there is more cushion compared to the open interest standing in calls, and which we can see very clearly there is. Okay. Now I can compare it with even the current week, which is today's expiry. I can compare it with the next few weeks or the September end and the September 5th expiry. So there are many things I can really connect it with, right? And in that scenario, I need to be very careful about what time of the month it is. Are you all with me on this, right? If there are any questions, you can ask. So this was my 2 bits on open interest. What I will suggest all of you is that there have been quite a few sessions in the free sessions which I do sometimes, and this time I'm doing a full workshop. But there is a session on the September or October of, it's on my YouTube channel. So this is my YouTube channel. One second, I'll show you. Yeah. So this is the YouTube channel. Okay. And these are the videos in the YouTube channel. So if you go back to somewhere around the September area or so, somewhere over, this is November, no? 1 second. Yeah, one of these, September, October, it was before the market mayhem. Okay, I think this is the one. Possibly this is the one, or somewhere over here. There is this movement which happened in Bank Nifty, and there was this exact thing we saw on the open interest. I would suggest watch all the videos of the live sessions. I saw the exact open interest thing happening, and I was telling that right now we expect to take this support. And just into the session, as we were talking, the market took a support. After the session closed also, the market really rushed up after that. So there was a strong pullback in a fall after that. So I could identify that position, I could identify that point from where the pullback would come because of two reasons. One was generally the technical analysis, and the other was the option open interest. So mingling the two variables was something which was very important. Okay. So keep that in mind, and today now we're going to move on to talking about one very important thing, which is about how to create consistency. Okay. Now, how to create consistency? How many of you have that question in the mind? How to have that question in the mind? Please raise your hands if you have that question in your mind. Now, I do get some trades. I do get some good trades also sometimes. But I really don't know how to create that consistency. How many of you have that question in the mind? Or how many have a related question? How many of you think that you are absolutely at the threshold where you can create consistent money, but there's something which is going wrong? Okay. Now, to start with, I'm going to just open the blank screen and make a very interesting drawing in front of you. A pattern which I've seen very, very common to many smart people, and there are reasons why they're smart and reasons why, even though they're smart, they can't make money sometimes. Okay. This is what I've seen. So I'll take a purple color pen. What I generally see is that people come with a certain amount of money in the markets. Okay. And after that, they start hovering their equity curve something like this. They go up a few bucks, down a few bucks, up a few bucks, down a few bucks. It's something like this. This is kind of equity curve. When they go up, they get very excited, they get very overconfident, they forget the risk, they choose to take too many trades, or they take one trade with a bigger position. They choose these kind of decisions, and then they lose money. By the time they come down, they actually feel a lot of frustration, and after they feel the frustration, they tend to feel very, very bad about it, and somehow want to work up, somehow go and want to make up those losses. They focus and they get some things right and then start making money. Okay, this is a common pattern which I've seen. There are a lot of places which I see, right? Then, so I'm getting a question from someone, Mr. Ishwar. Just hold on, I'll get back to you after I finish this, okay? And then eventually what happens is that the sort of patience is lost. After so much of up and down and still nothing happening, all the hard work seems useless and patience is lost, and they lose the account. They lose a major chunk of money in the account. Right? How many of you have experienced this kind of a scenario with your trading equity curve? Please raise your hands. Anybody? Okay, many people have. Okay, the upper people. Okay, yeah. Okay, great. So the thing is, you're no one new. A lot of people have experienced this. Even I have experienced this learning curve, and this is a learning curve. Okay, please understand. There's a learning curve. But the thing is, how to get from here to a stably rising, consistent equity curve, which goes something like this. So how to get from here to here is the bigger question. And the secret is hidden somewhere. Everybody wants to get that secret as if there's some holy grail or some strategy that works every time. But the secret is not there. The secret is in sitting through the different market phases like a professional. Okay. Now what happens is when you're starting a business, you want to open suppose a store, or you want to open a manufacturing unit, okay, or you want to open something online. Whenever you have a business, do you expect to make profits since the very first day of your business? Do you expect to make profits in the very first day of your business? No. I will show you also in the process how in the last 2 months one could have taken a few trends, a few stocks, a few indexes, a few technical factors and made consistent money out of it. I'm going to show you that. So when you're getting different kind of inputs for your business, different sectors your businesses are in, you still don't expect to make money in one day. You have something called a gestation period, right? When people come to the markets, they come with a different thought process. They don't come in as if they're doing a business. I'll tell you what thought process they come with. They come with a thought process that I have these degrees in my hand, I have worked a lot in my life, I'm a smart person, and I have got brains, and I've got marks in college. So brain-wise, I'm very much sorted. This is what they think, that their intelligence quotient will help them in the markets, right? What happens is that the emotional quotient is very, very weak, and they tend to slip away, because this is a place where you cannot use those same principles which you achieved, which you used to achieve the marks you achieved, right? Here you need to do something called sitting through different market phases consistently. And how do you sit through something consistently without, where there's an uncertain jungle of environment, without actually getting yourself harmed? There is a way. And that way is to really build systems. And there are two kinds of systems. One is a discretionary system, and the other is a mechanical system. So when you have trading around you, you build two kinds of system. Say for example, we've got in this software, okay, I'm going to take out something. This is called a technical query. Now, if I have a new technical query as I build one, what I can do is, and there are many other softwares and other things available in the market which allow you to do the same thing. You put a condition according to indicators, because indicators are calculative in nature, so you can calculate. You can't really ask the computer to identify a pattern for you, but you can ask for indicators, okay? So suppose I want to have some alignment with a particular indicator which tells me, let's take Bollinger Band, since we discussed that 2 days back, and I say the parameters of the Bollinger Band is this, and let me look at the intraday hourly chart I will look at. So this is 60 minutes, okay? And what is the condition I'm going to put? I'm going to put a condition that, see, the price should be high above the upper band. We're just taking a very simple this thing. And it will check on the current candle. I will add this condition. Then I'll take another condition. And that could be that, for example, that in the last few candles something has happened. Say for example, I'm looking at let's keep it simple. Let's keep it moving average so everybody understands. Right? So I'm going to take an average, and I will say the parameters are a simple 10 moving average, and the condition would be that the price has cut below the average in the last n bars. So the price is made high now and has cut the average in the last 5 bars. I'm making it 10 bars, okay? And I have to check on the bar number 0, that is right now. So from right now, the 10 bars. And what is the parameter? Again, intraday 60 minutes, okay? So when I add these conditions and I make a relationship out of conditions, okay? I can show you in the back testing, but I'm not sure if it will run in the live markets that well. Okay. So I'm making a historical condition. I'm making it a relation, and I am making the inputs like adding a group. So I will add a group which would be exchange define. I'm going to do it for all the FNO scripts. Okay. And I'm going to run this condition. And this is happening running right now. The offset is right now. Okay. So I don't see anything in this particular arc. Say I go 5 hours back and I run it. So it's a very small example. You know, in some of my old YouTube videos, you can see that I've shown how to run the system. Right now, I'm running it. Nothing is coming, but eventually things come. Okay, I'm making a very simple example in front of you, right? How these tend to work. Now, if you look at some of those system-related videos, you will find I've given an example. So what these help me do is help me to approach the market as per what phase I want to approach. So suppose I am very vehement about markets that are either very strongly uptrending or very strongly downtrending. Okay, and then my system and my style of trading, in that I like to have a Bollinger Band input that the entire candle should be above or below a particular Bollinger Band. Okay, the entire candle is, or the maximum part of a candle is upper or below the particular Bollinger Band. So for example, this morning when I see that as my live query was going on, okay, now this live query is different, and in case of Bank Nifty it was even better, it was showing, right? As my live query was going on, I could see that there was an entire candle almost below the Bollinger Band. So I had my settings put there. Okay, so it got me into getting in those kind of trades. It got me into seeing it like that when I saw the entire candle above the Bollinger Band. So this is showing me superpower. Okay, let's take a few stocks here. For example, Yes Bank. Okay, Yes Bank, I was discretionarily I had a view of short, but in general also, in the so many falls which Yes Bank has seen, there have been these situations where there is a complete candle which is either above it or this. Okay, and the other example I take is to see a trend indicator. So I take a moving average with it, and I mix these two. I can take triple moving average, double. There is a system I've shown in one of my videos which talks about triple moving average. Okay, there's a triple moving average system I made, and that system I use regularly just to get myself a hang of these stocks. Okay, so you can check out this video. I guess in this I have shown. In this I have shown. Okay, check out this video. This is 11 months back. Check out this video. You will really understand what I'm trying to say. So when I've got a mechanical thing pointing me out towards those areas where I actually get something which is physically, applaudable, physically pertinent, then I approach the market like that. So what happens, the different market phases do not perturb me so much, do not disturb me so much, and I can successfully look at, okay, this is happening, let me just make an analogy out of this. Now for example, today I was looking at Tech Mahindra, okay, since this is the chart of Tech Mahindra, okay, I'm still looking at Tech Mahindra, right, and after that I'll take up Ashok Leyland and somebody else. So I see, and one of my students, we have a discussion of all the past students group. We have a discussion group there. So he pointed out Tech Mahindra. And one of the scenarios was a certain scenario. Okay, so like every pattern has certain scenarios. So amongst what I explained them, one of those scenarios was building up. And now we had to wait and see. My personal inference was also that let's just wait it out and see how it goes ahead, right? So over here, Tech Mahindra is subconsciously on my radar because, in my reading it is there. Now when my alerts trigger the strong buy signal over there, automatically I will be the one who would go long on Tech Mahindra the moment it crosses these areas. Okay. The same thing happened with Wipro. Now Wipro, you can go and back on Telegram and check. I have spoken about a trade on this day. You can check, it's 9th of April. It's a massive trade. In the morning we got a signal, and after the first 15 minutes or first half an hour or I think it's first 15 minutes or half an hour, I did put out a message on this. Now the breakout is there, which is a part of my discretion, which is a part of how I look at the chart. And then there is a mechanical system which is aiding me, giving me the aid to make my work less and make me a little unbiased. Because if I keep looking at tick by tick, okay, then I will really not, really not trade very, very well. So don't keep looking for things which are like, a tick by tick thing. Otherwise it will be a problem. Otherwise you will kind of get biased every few minutes, and you just want to be like that dog donkey thing which I explained. You would want to be like that dog donkey kind of face. Okay, so don't get perturbed by small noises, and don't want to make a view every single time. You want to just be a little clear, little free, right? And also I was explaining the other day when I explained Bollinger, since we have it in front of us, how the nature of patterns are. That if the market has spent a lot of time above the Bollinger Band and in the initial phases, it is showing a strength. And then after the Bollinger Band expansion has happened, okay, enough expansion has happened, that means price has gone from one extreme to the other extreme. So when there is not enough structure present, when the Bollinger Bands are not compressed and the bands are really thick and fat, and the market tends to go in extreme, when the trend is not hitting the middle band again and again, the trend goes in extreme, then it is not viable to always go into the extreme and trade, right? And so, say for example, again, I'm having Tech Mahindra in front of me right now, right? So as Tech Mahindra is moving in front of us, we see the Bollinger Band factor also, that there is a compression in the Bollinger Band, which is very, very interesting. And now we want to see an expansion come. If this expansion comes, then there could be an inverse head and shoulder breakout where the left shoulder is still not yet developed, but right shoulder development is still taking place. So left shoulder is relatively smaller, so that is a pinch of salt in the particular pattern I'm looking at. But yes, there is a small resistance breakout which could come, and we could see how this plays out. So I'm keeping this on my radar. Another student had two stocks on the radar, is Titan and the MCX. So we had a meeting with all the past students. We're discussing these two stocks. Now how are we looking at it? When it came to Titan, okay, when it came to Titan, one of the major factors is that we are against a very strong downtrend over here. So the moves tend to be subdivided in nature. In case of very strong downtrends, even if something builds up from a base, it often tends to be subdivided in nature. Why? Because in this case, the right shoulder is not very, very developed. If the left shoulder is developed, right shoulder is not, then is a problem. So it can be a buy on dips kind of scenario. As far as the immediate resistance breakout was concerned, even the particular student who had actually informed and spoke about this chart first, he also played out the move this day. Okay, and the other move which he was speaking about was MCX, which again it was on my radar too. So it was a beautiful move with a beautiful breakout. So you see, when the price starts actually surfing on the bands, literally surfing on the upper band with a lot of strength, it follows this. And we're not just seeing it on this time frame, we're also seeing it on the daily time frame, right? So it is really following through those moves as we are seeing it, according to not just the pattern, but also according to the Bollinger Band. Are you all with me on this, right? So those who are asking about time frames, first understand the market phase you are in. First understand what you're trying to trade through that market phase. First understand how to build consistency. And then when you look at the different time frames, you will relate two things. One is that there needs to be a filtering of time frames, and the other is there needs to be a confluence of time frames. These are two different things. I think Mr. Ishwar, you were the one who asked this question online on YouTube comment. I guess so. I think so. You were the one who's asked. So very pertinent question. When it comes to two time frames, every different concept will have a way of looking at different time frames. I cannot have, an indicator X being looked at differently, indicator Y being looked at differently, right? Then when it comes to candlesticks, say for example, I put on the chart of Tata Elxsi, just hang on one second, or Jindal Steel. Jindal Steel is a very good example for today. This is something I sorted out yesterday. That it was a buy, it was a sell immediately in the morning. Okay, immediately in the morning it was a sell for a move which is a thrust. Now we are already in an oversold market. I'm sorry. Yeah, we are already in an oversold market in case of Jindal Steel, right? And when we are in an oversold market in a volatile environment, of course we can see pullbacks and we see either double patterns or triple patterns. So this is a double pattern, okay? And in this case, immediately the price is broken and there's a thrust which is down. So if somebody sells yesterday around 95, 96 rupees, they get up to 91 rupees over here on this stock. So this, along with, say for example, if I look at Tata Elxsi, these are major downtrending waves, major downtrends. So when you have got the major downtrends, that time a little bit of weakness in the smaller time frame acts on and becomes extended. So these two stocks were like, in the morning if you get the shooting star patterns over here, two shooting star patterns. The morning if you get anything in the positive, you just go short on this stock. As we speak, again, we see Nifty is continuing to go up and it has taken support around that area which we discussed in the option chain. You see this zone is also marked out as a line over here. There is a hammer pattern near this zone. Prices is extending. Okay. Today is an expiry day, right? As I said, like there needs to be structure. So when the price is gone without much structure from down to up, the need to correct again to the lower band can happen. It is something which is very normal, right? Let's see how our stock on radar is performing. So Tech Mahindra is now I think performing and we need to see it go above two levels. One of the levels which I saw was 694 and 695 around this zone. If we go above this successfully and given the structure of the pattern, I feel it could go right now. It could go in the short term. And so we wait it out. How many of you guys are following what I'm saying? Kindly raise your hands loud and clear. Then I come to the next question. Okay, thank you. So all eyes on Tech Mahindra. We're heading back to 11,000. Now, one very interesting thing we'll see right now. We'll go and check out how the option chain has behaved. I'll put a refresh. Okay, so as we saw the market going up, what do I want to see? This is the 29th August. Okay, so I want to see that a lot of people are actually now buying puts instead of buying calls. So let's see how the change has happened. So earlier around 10 lakh was there. Okay. I'm sorry, I need to go to the 5th September one. This is useless right now, last few minutes. Yeah. So do you see some change which has happened? No, it's pretty much the same. It's pretty much the same. I think some difference has happened in terms of people over here, the negatives have become more positives. One of the open interest strike is still a negative. Okay. And as we see over here, our stock Tech Mahindra and is about to possibly burst out. Okay, so you want to wait out for this, and those who are understanding, and I'm not saying that you should act on it or I'm recommending anything, we're just learning over here. Okay, but since we are learning live, there are things which we can see very, very clearly, right? And we also see the 11,000 mark has been approached again. So this is the morning high area. Again, something of significance to us. and our understanding. And if you're trading options, for example, then don't need to be a hero. You can trade the options which are you know the next month options also. So everybody must understand these things. You don't need to be a hero in the markets to make money. You just need to be prudent. And if you're prudent, eventually things will go in your favor. Okay, so let's get to the next question. Uh, where was this? Mr. Ishwar is asking, sir, we're getting trapped in fake breakouts. So how do you get a confirmation of a breakout in intraday? And how to analysis the volume of stock we're trading at 10-minute chart? First of all, Ishwarji, don't trade just one time frame, and don't trade such a small time frame in isolation. Okay, because that is where the false breakouts are maximum present. You don't need that kind of sort of low quality trades come about time and again. Sometimes high quality trades come, I don't doubt that, but many times what happens is low quality trades also come about. So you need to be careful of those situations. And I think if you've got that multiple time frame scenario right, most of your job is done. So wait it out a little bit, see how that multiple time frame works out for you. Say for example, when I'm looking at the hourly chart over here, if I look at the 15-minute chart over here, I'm aligning it with the hourly chart understanding, right? I'm aligning it with the daily chart understanding. So time frames, in multiple time frames, the breakout is happening, and price moves in these time cycles. So the bigger breakouts, if the more convincing breakouts, they are actually happening on multiple time frames at a time. Okay, this is this famous example I give of Sun Pharma. And I tend to give this to all my students. Okay, today also Sun Pharma I was sorting out. It's a beautiful, beautiful chart which happened today with the gap, and tomorrow we're going to go discuss gaps. Gap and gap zones are very interesting topics. Okay, so let's look at this. What happened over here? Those who came to the Pune seminar also must be remembering. So here I see a breakout on the daily chart, but at the same time I see a breakout which happens on the weekly chart also, because these are weekly levels. So two time frames coming together have given a bombastic move. I'm not even joking here. It's a bombastic move. When the price broke out, it just went like, huge amount of, and then pull back, and again the downtrend continued, etc. So you need to sort these out for yourselves and make a clarity happen in your mind about this. Now, since we are talking about, multiple time frames. Say for example, look at Wipro. We see that the daily chart downtrend is there, weekly chart almost downtrend is there, and we see multiple shooting star patterns which are not giving me that kind of conviction. Okay, so somebody asked about Wipro, and somebody also mentioned there's a hammer pattern. Just hammer pattern is in what? It's in the daily time frame where there is actually a downtrend happening, a strong downtrend happening. So the influence of this hammer pattern becomes weak. The influence of this hammer pattern is not so much. But when the hammer pattern is happening in the middle of a short-term downtrend or in this consolidation as we see, then the impact is different. Like even right now as we see, okay, this hammer is quite powerful, but you never know if this will be taken out. Getting the point? So you need to see how this is happening and what the build-up is. Until you don't see that happening in multiple time frames, then it is doubtful that you will go ahead and do the right thing. Okay. So when you're building consistency, make sure that number one, your psychology is right. You are going to sift through different market phases, and all the different market phases are going to show you a different way it moves. It will be measurable through different tools. So the knowledge of multiple tools aligned with the reading in multiple time frames lead you to accuracy, lead you to consistency. Most people do what is that when they start making money, they want to go into the smaller time frames. Chal 1 minute chart dekhte hai, 5 minute chart dekhte hai. I think this will work for me. Why? Because the previous trade worked for me. No. Look at the chart which is on multiple time frames. That is where the key to consistency is. That look at chart in an unbiased way. That I don't want to make money off it just because I think I will make money off it, but the market is ready to bunch. That is why I'm going to look at it in a certain way. So make sure that happens. Like for example, in case of tech manager, I'm literally waiting for the confirmations. I know that probably I can right now also get in and I can get some bucks out of it, and even if I was getting it, I would not tell it. I would go nibble a little bit position at a time, nibble, okay, because a lot of you are newcomers, right? So in this scenario, I need to be prudent with my decision making. I need to wait it out. I need to see that volume. I need to see that burst of volume which is going to happen if it breaks out with a lot of gusto. And that is not happening. Right now it is following all the aspects of patterns which I also teach my students in terms of volume. The volumes are drying up significantly. And if you look at these two phases of high spike volume, these are the last hour. So the last hour, generally the volumes are high. So we can, sort of ignore that. That don't really count. But in the recent past, we've seen a low volume and a volume crunch. Right? So that is happening right now. Okay. And you wait it out, you wait for the levels to be taken out, and then you participate, then you get it. And again, all these are what? These are probabilities. I can take out the best of few patterns for everybody. But the point is that you have to understand the nature of probabilities. And once you understand the nature of probabilities, then you can prove yourself that yes, I'm in this business. A lot of people get stuck with a certain amount. Most of these are mental blocks. Because sort of, they have evaluated themselves in terms of numbers. And yesterday I told you, don't set the goals, please set standards. Because when you set standards, did I say this? Did I say this yesterday? I don't exactly know. But yeah, I must have said something on these lines. If we set goals, that's fine, But in trading, setting goals can be tricky. Instead, set standards of improvement, set standards of performance. That is going to take you higher. That is going to matter in the long run. Okay. Now, since we are discussing about this stock, let's have a look at what the other stocks in this sector is doing. Okay. Are they also really performing? Because that gives us an intermarket correlation. Thank you. Thank you. Lovely comments coming from you guys. Thank you so much. I know, and it's so nice to have, these kind of sessions, because we're really going open and all out on seeing how the markets behave in various aspects, and this kind of freedom where we are asking each other different questions, etc. So we see more or less few stocks on the IT sector doing well. And IT again has been something which is a multi-month breakout. Okay, multi-month breakout. A huge cup and handle breakout happened a few days back over here. Again, with the weekly chart also having. Today also it went down, pulled back. As we speak, market has pulled back further in nice gusto. As we speak, our stock tech Mahindra also is just around the breakout area. Interesting things happening on the chart. Just made a new high. We have not made a new high compared to the yesterday's high, but just made a new high for intraday. You're seeing it go higher. Nifty off all, is really nice, really nice. So this has been quite an interesting session with quite an interesting kind of market movement and input, right? So let's see if we can, since we pushed ourselves to seeing the 5th September, let's see if we can see some change in this. So this is the 5th September options, and I'm going to do some refresh. So this is minus 153, this is 11 lakh, 14 lakh, okay? Let's see how the change is happening, if at all it is happening. Yeah, so we see that people have bought puts. Minus 153 has become minus 123 now, and this has also come down. So people are shifting from calls, booking profit in calls, and actually going and buying puts. right? So we see this change happen along with the uptrend. That means this uptrend is what? It is reliable to some extent. Getting the point? Because the shift in the mass mentality is happening at the same time. Therefore, the reliability is shown to us like that. So keep these things in your mind when you're looking at open interest. Just don't go blankly, just don't go because you have to go and check out some open interest. Have some logic, have the essence right, have some essence behind it. Understood correctly. I hope all of you got some really nice nuggets from this session. If you have any further questions, please ask. I'm not getting questions. Maybe I'm talking about certain very interesting things so people are listening, but I'm not getting the questions. I want some questions. Anybody? Okay, so in this case what happens is the more this difference is, the more the reliability. As you do your practice, as you learn more, see, I'm not saying that you can learn this from a book. This is something experienced. I say this to my students also. Why should I, say you something else? I say this to my students when I teach them open interest with a lot of examples, that you have to do this via practice. This is not something which happens overnight, because different market phases invite these different aspects of open interest. Okay, so they take time to be understood, they take time to be, beautifully understood. And oh my god, we see the Bollinger Band, okay, upswing is happening. Have we made a new high? Yesterday's high is around here, about another 50 paisa from yesterday's high. Have we seen the volumes come up? Have the volumes come up on Tech Mahindra? A little bit uptick here, not very, very specifically. But I think we are on the right track with Tech Mahindra. So let's wait it out a little bit more. I think there's a burst which could happen, then we could get more. Nice thing. Right? Okay, I have another question. So I told since I didn't want to talk a lot about this in these sessions, what you do is you contact my team for the course details. My team will explain you everything. You want me to set a personal call with me, they will do that for you. Whatever you need is there on technicallysorted.com anyway. If you need anything further, you can ask, not an issue, right? It's a Saturday, Sunday course, right? And yes, the recording of facility is there, not to worry. Of course, take care. Thank you guys. It was a pleasure to have the session, one whole hour of entire clear discussion and, talking about the markets and consistency. And you have to prove yourself that, you are part of this business. For that, gathering consistency on a consistent leverage is important. Just by doing well in 1 or 2 days, I ask this question very often to people. Okay, when do I increase my increase my position sizing, or when I increase my lot size, Don't do that until you have like a good few months of consistency. Just 1 or 2 days are not going to tell you if you're doing the right thing or not. Are you understanding what I'm trying to say? Yes, the fees is valid for lifetime in the sense that, see, you pay 15,000 rupees, you do the 15 session course, and after the course you get into the inner circle where we have meetings every month. Okay, so all that is free for lifetime. If you want to repeat the course ever for a very small amount of 2,500 rupees, you can repeat the course. So there are students in every batch, since I'm teaching for 4 years now, that some students of the past want to repeat the course, get a refresher. That way, 2,500 rupees is not a big amount for repeat. It's just a basic seed cost we take, right? Vinesh, you can drop your number if you if you want my team to approach you directly. You can just drop your number here. Yeah, absolutely. Thank you so much. That's really appreciated. It is designed in a way. See, what happens is before you come to actual learning, I have learned from the MTA, which is CMT Association. I have learned from the CFA Institute. So when I did my higher studies, the factor was not how much money I'm spending, but what is the quality of learning that is happening. But the moment I started teaching, I realized that, that people need to know what they don't know. So one of the reasons I do a lot of awareness programs, initiatives, or if people ask me to come and give a speech on a certain topic, sometimes I do that for free also, because I really feel people need to first know, and first know what you're paying for. That is, my website is so descriptive. It's got a lot of things. So first know what you're paying for. And then of course, you will not understand how priceless it is if something can teach you how to make money in the markets. So when some people, selected people who come, I take very few people in a year for this, and this is probably the first time I'm telling it on YouTube, because this will go on YouTube. Some people take one-on-one mentorship from me, and there's a lot of psychological things happening over there, a lot of inputs over there, a lot of hours, nuts and bolts, etc. And it's a very hefty amount they're ready to pay because they know what is in it. Okay, so the whole point is that it's not also so much about the money. It's about the person's initiative to actually come, learn, practice, and things like that. That initiative is what should, get your juices running. And in life, nothing happens without initiative. Everything happens when we are ready to take that leap, when we are ready to take that initiative, when we have committed ourselves to the discipline and process. And I think that is the juice of life. If you have all the money in the world, but you have nothing to commit yourself to with that discipline and to believe in something in a way, your life deserves that something to be believed in, right? So if you don't have that, then you are a success in front of the world, but you're not really a success in your inner self. And if you really have that, it doesn't matter how fast, how big, how soon, what success comes to you. Because in that state of mind is itself a sense of accomplishment. On that note, I'll be signing off today. Take care, everybody. I think I had an awesome time with you. Hope you did too. Thank you for all the appreciation. We're doing this like a really long 5-day thing, and hope you all are following even the older videos and follow the videos repeatedly, see them on YouTube, listen to these things again, and it will be really, really nice. Okay. So take care, ladies and gentlemen. I'll see you tomorrow at 1 p.m. on 1:15, and have a great, great evening. Happy trading, happy understanding the markets. And after 1 or 2, 3 days of a little bit of a lull in the markets, probably we'll see some action happening across a lot of stocks and across a lot of sectors and indexes tomorrow. All right. So happy Thursday to all of you. Take care. Goodbye. Enjoy and good night. Thank you. Thank you all. Yes. Make the most of it. Take care. Thank you so much.